Okay, we're going to do a real quick trade recap of the US dollar trade over the last 3 weeks. It was a counter trend trade, bearish trade that was executed on a 4 hour chart as a swing trade. Um, this could have been used whether you were day trading, swing trading, position trading, whatever your preference was. It's all about the setup and the follow through in your particular time. So we're going to start with on the left hand side of the screen here is the weekly chart, daily chart. Excuse me. And you'll note from right about 2021 till today, the Aussie dollar has been in a downtrend. But if you look at it starting in 2023 up till today, it's been sideways. But if you look back again, you come a little closer, maybe beginning of the year up till now, you're actually in a little uptrend. So we've gone from a downtrend to a neutral to possibly an uptrend. Will we continue with that uptrend? Don't know. Doesn't matter. This is all about setting yourself up, figuring out where the liquidity is so you can take advantage of that. If you don't know where the liquidity is, you are the liquidity. So we're going to zoom in just a little bit more here on the weekly chart. What I've done is I put this weekly order block up here, and just below that order block are two dashed lines. You'll see those are liquidity zones just under that order block. So the potential here is as we're coming up, will this react and produce a bearish retracement? So as you can see, price is always going up, coming back, going up, coming back, we're going down, retracing up. Either way, it always moves in this fashion. So the goal is to find where those turning points are and play your way to the next one. So what looks like could happen here is if it does indeed take a bearish turn here, probably the next point down on the weekly chart would be about this area. So we're looking at this as a high and this as a low. That's our zone to play. Again, if you're playing daily chart, 4 hour chart, 39 minute, 5 minute chart, whatever it is, once you know these zones on a higher time frame, you set your bias. And if had you followed this as a day trader, you would have had your bias set for 3 weeks. Okay, so we're gonna come in here and we're gonna take this. Let's look at this on my daily chart. The drawings do project into the future, as most drawings do. However, because we're on bar replay and trading view, you will see my drawings out into the future. So you have a little benefit of hindsight to see what's coming, but we'll explain as we go. So we're going to step forward here just a little bit at a time here as we get up. We're watching close to see as it comes up to this zone where we have both a weekly and a daily order block, what's going to happen, and then what do we take and how do we react to it. Got a couple of trend lines on here. So one way to interpret this is, if you have a trend line break, how much of a bearish run could you get? The other way is to use supply and demand. We're going to use a little so day. It didn't quite make it up to there, right? And it also pulled back to the trend line. So is that doing what we said or not? It's a no trigger, no trade. So gonna go forward up, it retraced back right up again. And here. So now at the end of this day, we've gone up and we've taken out some liquidity and retraced back down. So that's a potential sign that we're starting to see some trading because we've now come through these two liquidity zones into this order block and retraced. Now, what we're gonna watch for is will that continue? So what I'm going to do now is I'm going to change this chart over here to a 4 hour chart. Change this chart over here to a 15-minute chart. So what we're going to do is we're going to use this as our primary time frame, 4 hour, and we're going to use the 15-minute chart as our trigger chart, lower time frame triggers. Sure. There we go. There. All right. So now as I step through, it's going to advance in 15-minute charts because that's what's on the screen. So fairly quickly here so we can just get the idea of the play. Pause it when it gets there. So I'm watching as we do. You take another liquidity sweep, excuse me, another liquidity sweep of those order blocks, but we're still above those trend lines. So now we're coming down to that first trend line, still bouncing around, giving up some liquidity, bouncing down. Now we're below that first trend line, and pause it right there. It's not pausing for me. There we go. Excuse me. So we have now broken both trend lines. We have also, once we broke that trend line, we also had a break of structure here below that low. Once you have that break of structure, and this is going to repeat time after time after time, you would expect after breaking a structure, it might go down a little bit, but it's also going to at some point retrace into another order block and take some liquidity. And you can see it's already done that. It's already bounced back, come up into this order block here, which is the 4-hour order block. And you can see we have had a liquidity sweep right there and a couple more. Now we've broken down pretty good. This could be a fine entry, but as this is our first pullback after a bullish run, we're going to wait just a little bit more for one last piece of confirmation before we enter. So we're going to keep going here. 15-minute chart. You can see on the right hand side, breakdown. Coming into an area, you can see we have not broken below that low of that big liquidity sweep. We've used some wicks below it, but we haven't closed below it. So that's kind of what I'm watching for as possibly a little more confirmation. Well, and there it is right there. So we have now broken below that low. And so it's another little break of structure. Um, so I would be expecting that this could possibly retrace up into this area somewhere, or keep going. What I'm going to do is I'm going to sell one contract right now, and that has, you can see it right there, has sold. So far we haven't made any money. It's possible this pulls back a little bit and our stop loss is up here. So if it goes up above here, we're out. If not, we stay in. So continue forward. Does bounce back a little bit up, but then it drops right back down. And the probability was with us in this case because we've come what? We've come down through two trend lines. We've taken out two liquidity zones. And that's why this was a fairly safe entry without having a full retracement. So now what we're going to do is we're going to go back a little bit here, just fast forward to the next one. So as we coming down, we are expecting to go down, and you can see my drawings in here that are already in the future. So you can see where we are going, but it'll be better when you play with the replay. See how it builds. Because the price goes up and down, you're always watching for it to take out liquidity, doing breaks of structure. You can see I've got breaks of structure labeled. So now I'm going to press pause, and it's going to finish up the day. And why it's pausing. Okay, it did not pause on me. What I'm going to do is I'm going to select back just a little bit to there. Okay, so now we have gone back in time just a little bit. Come on. Okay, so you can see we're going sideways here again. We've had a nice drop. Break a structure again. This was labeled in the future because it doesn't actually break the structure until we get a close below that. So we're going to continue forward, see what happens. Control this time. So here, coming along, still waiting for, oh, there we go. Look at that. So there was a big break of structure. It came down. We know we have this downtrend behind us. So after break of structure, we are expecting it to bounce back some, possibly taking out the next order block ahead or wherever liquidity is. That would be here. Unfortunately, we're already a fair distance down. The question is, do you take the risk and jump in the trade? Do you wait for the next trade? It's up to you. We're going to jump in. We have the benefit of hindsight here. So again, so now I've got two contracts here, and I'm going to keep moving. Until we get a little closer to the next one. Okay, so now coming along a little bit more, and you can see continued downtrend. So we're actively looking for more bearish trends before we get to our target, which is below all these green lines. So keep going forward here. So what did we see here? Now we have a true break of structure, right? We also know where the order block is back above that. So we're just going to keep watching. Coming back up. Now we have swept that liquidity in that order block. We've definitely had a large pushback down into the direction that we know is dominant. So we're going to sell another contract. So now we should have three contracts sold. So there we go. All right, so we've sold another one, and we're going to go forward. So took a little bit to stop. But you can see we broke another structure here, right? We broke that structure. So now the idea is we need to think about looking for a retracement back up to liquidity or the order blocks, and of course breaking that low there or there before we take another trade. We're also coming closer to our target. So the closer we get to that target, the less likely or the more risk you have to get into another trade where it gets too short, because you never know when it's going to reverse. We put a target on here. Doesn't mean price is going to respect our target. Our target is just a line, and our line is based on some logic, but you just do not know that. So we're going to continue forward. Continue. You can see we're not going down below the low of that bar, that big red bar that we called break of structure earlier. We're continuing. Goes up, takes a little liquidity. It's moving down. Now we just look like we're breaking structure, right? But it doesn't actually close below that line. It just keeps taking a little bit of liquidity below there, and look at it, bounces up from there. That's what's happening there. Okay, so now here again, we bounced up a little bit, came back down, took even more liquidity below that low. And so what we would expect is we would still expect that to go up and come up to this order block, or at least above here before we take another order. You just never know exactly where it's going to be. So that's why you always watch it. Continue. See, we come up into that order block, takes a little liquidity sweep, and it pushes down more, but then right back up into that order block. So there's no trigger, no trade, you know. And if you go back up above your stop losses in the previous trade, then you get out, you take your profits as we continue forward. So here we have had a big gap down, right? We've created a new order block here. So watching for an opportunity and coming back up. Still have not broken down below that liquidity, but we have here. So it has taken this liquidity there. Continue forward. So now we've come into this order block here. This is on the intraday 15 minutes. It didn't quite make it back up to there, but we had a gap. We are in a downtrend. We know our target is close. So here, relatively safe to enter. We're going to sell one more contract. Okay, so one more contract there. Now I'm going to simply change the view on this screen so we can just let the autoplay play out and see the rest of the trade come to an end. Okay, there's that. To play here so you can see it. Okay. All right, so now I'm just going to let it play out. Watch this target as we get close. Anything again above here, we pull our stop loss, take our profits. It's bouncing around. It bounced way up, but it didn't take our stop loss out. Price is always going up and down. That's why you set stop losses. Set just outside the range. Taking out some more liquidity, and we're headed down. These are equal lows right here on the 4-hour chart, so that's the point where it's going to have to break through. Here we've taken out some liquidity, then we go up, take out some liquidity on the sell side, and continuing down. Look at that, pushes down hard, and watch what happens as it gets closer and closer. So now, just press pause. We're going to go back here, just let it finish playing out the day. Okay, you can see, well, I'm waiting for it to finish out playing out the day. Stopped it. But it came down to that target and it bounced rather strongly. That's why you pick out these order blocks. So you know high probability targets and entries. So because that was our target, just get the center of the screen here so you can see it. So you see how it came down, started taking out liquidity right at the edge of our order blocks. Sometimes that wouldn't happen until the opposite side of the order block, but that's why you watch it. So it started happening there, didn't happen, but it happened again. So any of these points would be the point where you got to say, hey, I've reached my target. I am getting out. So if all goes well, somewhere in here, you would have bailed out of all of those previous 4 trades. And then, of course, what did happen? You saw it bounce right up and out of there. So we don't know how far this is going to bounce. That's not the trade we set up. The trade we set up was a 4-hour chart. Just going to try to zero this in so you can see the whole thing. There we go. So the trade we set up was from here down to that target. We put in 1, 2, 3, 4 trades along the way, took advantage of the whole thing. If you were a day trader on a 5-minute chart, you would have very likely, you can see there were probably many, many more opportunities, but you had a bias already designed in based on known order blocks, known supply and demand areas. So that all worked out really well. Let me know what you think. Have a great day. I'm going to flatten this out, and you can see plus 20.09 over those 4 trades. Have a great day. Let me know what you think. Thanks.